This is Justin Pulitzer. This is my weekend video update for the week ending August 31st, 2014. I have a lot to cover this week, so I'm going to start off with going through my view on the major indices via their retail ETFs, and then get into some of the momentum stocks that we've been discussing the last couple of weeks, as well as some that were very prominent on the stream this week, and then also do some good housekeeping on the earnings from plays that I had mentioned from last week. So let's just jump right into SPY. As you can see, SPY had come down on this Russia news, and then came back up and obviously put in some new highs here. And then this week we did have a little bit of a back off, but that back off never even came back to test the breakout point from these old highs. And my thinking here is that there are obviously three scenarios. The first is that we come back up and make some new highs. Obviously we have some poor highs now in here, and this might want to repair higher. If it could also just chop and put in some sideways action with some consolidation, which I would view as very bullish, because you'd basically just be consolidating up at the highs and giving these major moving averages a chance to end trend to move up and catch up with price. The other scenario is that we could have a bit of a pullback and take out this 199.39, and if that happened, my thinking is we would probably come somewhere into the middle of this range in the 197s, which would coincide with that secondary trend and probably these rising 20 and 50-day moving averages as they came up to meet price. So that's what I'm going to be on the lookout for this week, that either that move up through the highs, the sideways chop, which I would think you could start looking to as consolidation, maybe sell some strangles or some out of the money premium if in that scenario, and then if we came down here, I'd be looking for some type of a buy point here for a bounce. That was the SPY. If you take a look at the diamonds, it's sort of a similar picture, that you came back up, you made a slightly higher high, although we did have a back off in that the bounce off from that back off wasn't as strong as SPY, although it is still holding up here in this upper distribution. My thinking here again is that if we do come down, we'd probably have this steep secondary trend line here as our first reference, and then obviously the rising 50 and 20-day moving averages. If you take a look at a Fibonacci retracement of this range from the low to the high, the breakout range really, which was 167.29 as the high end of that range, and the low end is 166.06, that the 50 and 61.8% Fibonacci retracements coincide beautifully with those. So I would think that that area would be a pretty strong area of support for a buy, for a bounce, if we did happen to come down there with some type of a pullback. Not to be too scenario trading-ish, but if you take a look, this could be considered, if it did come down there and hold strongly, a inverse head and shoulders. And if that did happen and that pattern resolved somewhere to come back up into the highs, you could have some kind of a next big move leg higher, or obviously if that pattern failed, it would get pretty ugly. But my thoughts is I don't want to get too far ahead of myself, but I do think that if any move back down into that area on some type of a correction is a buy. And again, I'm really just looking for some more consolidation here for the next couple of sessions. Next week is obviously the first week after Labor Day, and you're starting to get some people back, although I would expect some more of the bigger volume to come in maybe the week after. So this could just be one of those, another scenario with some more chop. So that's definitely something to be mindful of. You want to keep your eye out for that. IWM has sort of been the weaker of the major indexes. As you can see, we're nowhere near these highs here. And if you take a look, though, I really want to put this into context. If you take a look at, let's say, a 3-year chart, and where are we? 6 months, 3 years, let's say daily. Yeah, if you take a look at IWM, it had been in this really defined channel higher for quite some time, and it had a breakdown of the channel here, and this came in early in the year, like in January, and then it rallied back up to get back into the channel, and then it sort of just meandered and has fallen since back out. But what has it really done? I mean, it's just been sort of in this lateral range with this 107.44-ish area here being the low, and this 120 area being the highs, with sort of this 117-ish area here as the level that it can't really sustain over. So my thinking here is that the IWM is coming back up now if you take a look into that area, and this could be some level of resistance here. I usually would be a fan of buying the IWM closer to these lows and then pumping it out sort of up toward these highs, but this is something to be mindful. You do have markets that have been up in a pretty big straight line. They might be due for a little bit of a pullback, so you might want to look for some resistance if we start getting up into this area. If you do happen to get over these highs here, I would think that that's a screaming buy for a breakout of range in IWM, and you'd probably see the entire market take a pretty large leg higher, possibly for a blow-off top scenario. But let's not get too much ahead of ourselves. Let's just put on the caution flag, since we are coming into that level here where the market starts getting a little bit unsustainable with IWM over that area. So again, there's usually not such things as triple tops. If you do really start powering up through this area, I would say that the taking out of these two highs is definitely bullish. Anything that, kind of backs off here is really just into range. And you can see, you have the 50-day moving average, and here the 200, the 20, and the 100 all kind of coincide. So maybe there is just some listing, and we just kind of fall back into like this middle of this range. So I'm not really looking for as much of a trade in this. It's sort of a go with. If you get up above these highs, then I think you get the excess higher. If you come back down into here, you're sort of just back into a range play. So that's IWM. It's sort of just choppy. It's in this sort of sideways range, and I guess you could just play the range extremes until you can't, until there's a breakout or a breakdown in either direction. Another one that has been on the move is this TLT. If you take a look again, this one is another one on a bigger chart. If you take a look at this thing, is such a slow mover in terms of daily. Let's take a look at the monthly. 5 years isn't even enough. Let's do there we go. So if you take a look at this sucker, it's been in this sort of defined channel up, and once you start getting on the backside or the outside of this channel, it gets unsustainable. And that unsustainability starts happening up around this 123 area. You can see we kind of charged up into there, pulled back, and then over here we actually even got through it and put in this major high here at this 132, and then proceeded to back off and back below it and come back in mid-channel. So I'm sorry this chart might be a little bit muddy because I have a lot of price levels in here, but let's zoom in and take a look at what I'm seeing. And my thoughts on a shorter term basis, if we go to, let's say, a 9-month daily, is that we're starting to get close to that extended area. As you can see, this recent up channel that we've been in after this down channel break here, you can see there had been a down channel actually in TLT after that major high was made. Oh, we got to go back a little bit further even. Let's just do 3 here, just for the hell of it. So you can see we sort of were in this bit of a down channel pattern. We actually fell out of the channel here, and it was actually quite bearish. But then we started stabilizing here, came back up, tested, had basically equal lows, came back here and violated it a little bit, but basically we're holding, and then started coming up and making the pattern of higher lows and higher highs, and then it was sort of off to the races in this channel. So now that we're through that intermediate term downtrend, we probably are going to start seeing some resistance now up into this area here, which was the top of this rising channel here. We've fallen below it before and gone through it a bit, so I would use it kind of roughly as a guide, but sort of up into the 120 starts getting extended, and then if it kind of like can chop sideways and then get higher, I would think we could start seeing some real major shorting action for this. If it starts getting extended into that 123 or higher area, I'd be looking to put on some major shorts. Probably I'd be looking to sell some out-of-the-money calls just to increase my probability of success and lower my delta in case there is some type of a market event, where you get some kind of a pullback in the major indexes, and then maybe this puts in some type of a parabolic move. But let's not get too ahead of ourselves with that. This area here, this extended zone over 123 is extended, and I'd be looking to sell some out of the money premium for sure if that happens. Let's go to the big Mac Daddy of them all, the Apple, which has been somewhat of a pretty nice winner for us. I had discussed it being a buy on that Fibonacci move when it came back down to that 61.8, and then we were talking the last couple of weeks about measured moves and where price could take Apple. And if you take a look, we're kind of up getting close to the targets. I had mentioned that if we got through this old high, this 99.44, and held 100, that we'd probably see 103. And on Friday, we got really close. I mean, we got to 102.90. We missed it by about 10 cents. Maybe we'll correct that and get the full 161.8 extension to the 103.25. But I think that we're starting to get into a little bit of an area where we might want to start taking profits on rallies, at least in the short term. I think longer term, Apple could see up higher, possibly even into the 109s. I don't want to sound too wildly optimistic, but I don't think it's out of the question for that to happen. If they do have some kind of if the market does have some kind of move into the fourth quarter, which is typical, the Santa Claus rally, Apple probably will go with it and see those highs. But we're starting to get a little bit extended here. We've come up really from this pattern is called coming up from the bottom, and we're getting close to that measured move in the mid 104s. And even into this Fibonacci extension of this 103. So I would think to just book a little bit of profits. We're coming into the iPhone 6 launch. Typically for Apple, they are a bit of a sell the news. There's someone disappointed, or anyone who bought decides to book some profits. And I would probably be looking to take some profits on rallies here. I do think it's still a buy the dip stock, but just being prudent, it probably makes some sense to take a little bit of profits off the table and look to buy some dips. I'm going to probably leave a little bit of my long on just because it's in clear air, and there's no really there's no resistance here since you're through all of the past highs. But prudence dictates to me again, just take a little bit off. Facebook is another stock that I think you guys know I've been bullish on for quite some time, and I want to answer a question here and then also discuss what I see in the chart pattern. June asks me to mention in the weekend video, compare selling puts in Facebook versus buying calls to go long, and she sold the 912. So for next week, this must be the 72 puts for next week, and is that better than buying calls, and why? So let's discuss the chart and then we'll get into the options. I know a lot of you have been asking me to do some more segments on options. I'm going to do that, but they're really not meant for the weekend videos. The weekend videos are really meant to be more on chart patterns and in price action. As far as options, they're a little bit more intricate and detailed, and I will be doing some videos on those and only on those that won't involve this sort of chart action with the major indices and the Momo stocks. It'll just be option specific, but that's going to be a little bit in the future. So let's take a look at this chart. Facebook came up and it had a bit of a run, and then it had this big pop on earnings. I usually don't like this type of a pattern when it runs up into the earnings and then has this sort of like last gasp. But my thinking on Facebook is the earnings were really pretty good, and the stock has really kind of held those gains fairly decently. You see, we kind of came back here. We sort of filled the gap, which was really to these old highs, and then started rising again, and we started making higher lows and higher highs, and we've been holding this little baby trend line. And it looked here like we were going to have this nice breakout. Unfortunately, we got a bit of a downgrade on Facebook based on valuation. And I think that was from Janney, and the stock came back down here to test the 20, and it held. And then Friday, it looks like it kind of resolved itself higher up over the highs of the prior day. So I'm thinking Facebook is still pretty bullish. I like it as long as it's in this bit of an up channel holding the 20-day moving average. In general, as a rule of thumb, I find when momentum is going higher, the 20-day moving average is always a pretty decent buy point, at least for a day trade. And I would think that you can probably hold Facebook long against these lows of 73.73. If that broke, we'd probably fill up this triangle here to come down and test the 50-day moving average, which would probably coincide with these old highs and the breakout level. And at that point, we'd have to just kind of reassess, because if that broke, then we'd be looking really for more of a buy on one of these trend lines, which kind of seems to have a bit of a confluence here of this primary and secondary. But let's not get too ahead of ourselves. I'm still thinking Facebook is bullish. I'm looking for higher highs in the stock, but again, let's use the 20-day moving average and this little interim trend line as our guide, at least for now. If we came back down here, we could start discussing the 50-day. But I'm still thinking Facebook is fairly bullish, and this sort of sideways holding up high and tight is to me fairly bullish. If we take a look at June's question, she starts talking about the 72 puts, what the benefit of selling those 72 puts are. And if you take a look, the expected move here is, for this week, is about $2, and I kind of hope that's what she's talking about. I'm assuming this is the week she's talking about. I'd have to recheck, but she's saying $2.81. So that's about the expected move of Facebook. If you subtracted that from the current price, you get roughly about $72. So I'm thinking that June's play is probably gonna work. I don't know if it's really worth it for this small amount of premium. I don't know when she had actually put that play on. But if you take a look, her probability of these expiring out of the money worthless are almost 80%. You're looking at 78 point, let's just say 6, we'll round up. And the probability of that even being challenged or touched is only about 42%. So the probability here, June, if you think about flipping a coin, that's 50-50. Your bet is better than 50-50 of ever even being challenged, because this probability of being touched is lower than 50%. And you're taking on a bet here that basically has a 78.6% chance of being correct. So that's really the benefit of selling the puts. You're making less money, obviously, but you have a higher probability of success. And if you even look at your Greeks, the problem you start facing with these weekly options is that this number here, this theta, which is the decay rate. So 4 cents comes out of these options every single day. And that number starts getting higher and higher as you start getting closer and closer to expiration. That's really the benefit of selling puts over buying calls, because basically what you're doing is you're saying that you think the stock is going to stay over this certain price by this certain time, rather than saying I'm going to be long premium and it have to not only move in my direction, but do it in a specific amount of time. Like if you were long, let's say just the 75, or let's just say you went a little bit further out, the 76 calls, you'd be losing 5 cents of your premium every single day, which means you have to be not only right, but right really quick. And if you take a look at this chart on Facebook, it's sort of just been a little bit choppy. So you're betting on that upward move happening in your expiration. I mean, it could even take it could happen a few days later, and you still be right, but it's not right within your time frame. So that's really what the benefit of selling the premium versus buying premium is, in my opinion. And I hope that answered your question. If it didn't, please send me a follow-up, and I'll try and address it in next week's video. So let's get into the real meat of this week and get into some of the exciting moves that happened. And let's discuss Twitter. I had talked about Twitter being a long, really way back here. I had done this interview on Benzinga, which is a pre-market show. I'm sorry, I had discussed it actually around, I believe it was around here when I was talking with them. It was pretty low. It was, I know, in the mid 30s, and I had discussed with them that I thought that the stock was going to go to $50 on earnings, and the stock did actually. It did it in after hours, and unfortunately, it never opened up and saw those highs in regular market trading. The high of the day was actually 48, and you wound up having a lot of people who kind of just sold into that move. And my call actually at the time on Twitter was to sell that number. To anything over 50 was a sale, and I sort of started bending back, being bullish, in my second interview with them and said that you can sort of buy this past high here, and that was in the 42s, and that wound up working out really well. And then the stock sort of just did this chop, and I had posted that I said anything up over the this Friday high here, and I'll show you that on the Twitter stream. Twitter over Friday's highs looking good to me, looking for 48s and then maybe 50s again. And this move really worked out quite well. You had this bit of this triangle here. If you take a look, it's sort of just like this compression of price. Let me draw a little bit of a see, if you sort of look in this wedge here, you can see price compressing, and here's a bit of a breakout of it. And then, you did get the follow through with the move up here, and you did get to the $50 mark. So here's the issue. Let me just delete this so we have a little bit less to look at. If you take a look at Twitter, the breakdown of this sort of move after their IPO came at $50. Like you can see, it spiked up, it made its all-time high up close to 75, I believe. And then you started making lower lows, and then lower highs, and then lower lows. But the real breakdown here came when you took out this low, this $49.99, which is, let's just say $50. I mean, that's really what this is. And you kind of came down here, and then you lost it. You kind of tried to have a bit of a bounce. You couldn't even get back, and then it was just, got ugly. And the stock basically bottomed out here at $29.51. So we're really just first coming back into that area, and people are being made whole. All these people here were wrong, and now they're getting their ability to get their money back. So my thinking here is that Twitter probably needs to do a little bit more consolidation up here, and I think anything over this 48 is pretty bullish. So my thought on Twitter is it's a buy the dip stock anywhere over this trend and anywhere over $48. As long as we hold over there, the stock should go higher, and the next level would be to test this into the 52s, which is almost 53, which is this next peak, or this, I should say, this next bounce point. But I'm thinking Twitter, like I said, is a buy the dip stock. They had pretty good earnings. The report was good. This was a larger than expected move. And since then, it did come back down. You had some sellers, and now it's been repaired. You're back up over this high. So anything, let's just keep it simple. Anything up over 48 is bullish. That's it. That's really it. So buy the dips, as long as we stay over 48. Just be mindful that this may have to take a little bit of time to build out, just to get some of these old sellers, this old supply out of the market. But Twitter, again, I think bullish. Let's see. Then here we go, Twitter. This is just some more talk about it when I was trading it in real time. That it got 48s to do a little bit of trimming up of the position and let the rest run to 50. And then I said I'd revisit the analysis in this video, and I just did. So that's my thinking on Twitter, and this is just to show the accountability that it did happen in real time. That this isn't just an after-the-fact analysis, that this did happen. Let's see, Netflix. Let's discuss Netflix. That's another popular one that people like to talk about. So I had been bullish on Netflix on this breakout here, that it took out this descending trend line, and I had said that I thought it was going to go back up and retest the highs, and as you can see, we did. We actually came up and made new highs, and I had said in last week's video that I thought that this stock was still a buy the dip stock and bullish as long as we held this this steep trend. The problem is this week it did lose it a little bit. So you can see we came back down here and we lost it. And now we're just kind of trading on the wrong side, so to speak, of this trend line. But the more important thing is that we're over the original highs of 75.87. So I think as long as you hold up over that high, Netflix is still a long, because it's really just in this consolidation. It's really breaking this trend more by time than by price, and that's really what matters. So I would say if you're a short-term trader, this swing low here of set 470.81 is a good stop if you're playing, and if that gets taken out, we'll probably come back down and see this 20-day moving average, and maybe test into this like breakout area and this next support zone. But I'm thinking that the stock is probably fairly bullish just as long as we stay over these highs, and you could probably still play by the dips with this stock. Although with the caveat that we did take out this ascending trend line, and we do have to be a little bit more cautious now that we're trading on the backside of it. So now we're not playing with trend, we're playing with past swings and pivots. The momentum trade here would be to buy it up over this high, over the 485.30, looking for, you know, the move, I guess, to 500 would be my thinking, that if the stock gets up over here, we're going to see 500. Stocks like this tend to be drawn to these big, large numbers, and it would not shock me in the least if the market stays bullish for Netflix to see 500. Again, just the caveat: we want to stay over these over this low and this swing high, and then it's still a pretty strong buy the dip stock. Now for the superstar of the week, Tesla. I don't think I've ever had people challenge me more or talk more trash to me than this stock. I mean, it's just absolutely incredible how much people still want to hate the stock, and the stock is at all-time highs. So I had discussed, again, the same as the Netflix trade, that this was a buy up over this downtrend line, and I had been in the stock and in the trade. This day I was interviewed on Benzinga again, and I had said that I thought the stock was going to fill up the triangle and still make a move to the all-time highs. The next day we had a slight bit of a pullback, but then after that, the day after, we got that Tier 1 firm upgrade. I keep referring to them as Tier 1 because I forget the name of the firm, but anyway, they got my price action for me. They got me really close. I had actually taken some profits here and had been sitting a bit on the sidelines after that, and Tesla had stayed strong and was just sort of in this chopping zone here, you know, just consolidating under the highs, which I think is pretty bullish. And here you had a bit of a test below range, and you had this, like, again, still a little bit of consolidation and chop, but all in the mindset that we were still above the past swing high. So I had put out a tweet. I don't have it here to show you guys. I think I had mentioned it in last week's video, though, that anything over this this hammer high here was a buy, and that high was 259.33. And you can see here we had a bit of a gap up here, and we took it out, and then I was back in the trade. I got involved at this with some selling, some puts short, and the stock again came back up to the highs, and then just was in this consolidation mode, waiting for breakout. When you see this type of a pattern, this type of a bull flag pattern, and you know, you come back to test an old reference high and the back off is really minimal. This isn't a double top. If it's a double top, you'll see a big steep pullback. You know, people are really anxious, they're waiting to smack the bids, and they'll take price down very aggressively. That's not what happened here. This stock just kind of chopped, consolidated, again came back up to the highs, and then you know, on Friday we had some news here which moved price up above the old highs. You had this could be a professional gap. We'll have to see next week. But you had a gap over the highs, and then a move up to this 272, which oddly was my target. I've been sort of discussing 272 on the stream, and so you guys know that. We already did Netflix. But I hope this answered this question. I had mentioned on Tesla that anything over this 265 half and 260, basically this 265.50 to 59 area, would get a squeeze going, and not to front run it though, but to go with it on the move. And then I had mentioned that I thought that the break was going to take us to 272 and to 277. Here I could see Tesla went green. This was on a down day. Keep an eye on her. She needs to take out 265s and then run the highs to get to the big squeeze going to 272 and 277. So that analysis wound up being correct, and I still think you can own Tesla for by the dips as long as we hold this this trend and over the 265 area. You may see a little bit of a gap fill possibly early next week if there's some market weakness, but my thinking is that this probably caught a lot of shorts by surprise. I think they were really I don't know why it did, but I mean, it shouldn't have, considering this pattern, but it did. There was a lot of people who were sort of surprised by this. It came on news, on China news, and Tesla did come back up, and it didn't close at the highs, but it did close above its old highs. So my thinking on this is that you may see a little bit of backing and filling, but as long as you hold over this 265 and you hold this this trend, it's pretty bullish. If you're really short term, you don't want to see it lose the low of this bar, which was 267.51. So anything under like anything under 267 half, you might want to just give it a little bit of room. But anything under that would be, you know, a stop point if you happen to get in late. And for sure, anything that took out this 265 and anything that took out this trend, you know, we'd start having to just be in caution mode, not bearish, but just in caution mode, because you know, the two of our things that we look at, which is old highs and then trend, would have been taken out. And then I'd be starting to look for, you know, some, maybe even first of all the 20 MA as the next. That'll probably move up at this point. It won't be this low, but the 20 MA, and then even possibly down here if you start getting some real bearish moves in the market. But I'm not thinking that. I'm thinking that Tesla is probably going to at least chop and probably work its way higher, just because it's at an all-time high. Anyone who's ever been short this stock and it still has a pretty high short interest is wrong. And the price is high. It's on a pretty nice breakout. So I'm glad that this pattern worked out. It's one that's a very high probability trade, and we'll be looking for that for some continuation next week. With that, I'm going to end the video. I had planned on doing a little bit more on some other stocks, but we're already over a half hour, so thank you so much for tuning in, and if you have any questions, please leave comments. Don't forget to like the video. Hit the like button if you like it. So again, my Twitter handle is @JustinPulitzer. Please be sure to follow me, and I look forward to trading with you guys this week.